Before we start this podcast, this episode is sponsored by Zeta Markets. So if you want to trade perps without giving your coins to centralized exchanges, Zeta gives you all the benefits of your favorite exchange with self-custody and transparency. Trade perps with leverage, backed by Solana, speed, scalability, and almost no gas fees. The link is in the description. Let's get back to the video. Hi Kyle, welcome to the Gus Show. How's it going?
Hey guys, great to be here. Excited to be one of the first guests. And good evening to you, and I guess morning to me.
Awesome. Directly to the first question. What's your origin story?
Yeah, my origin story. So I grew up in Austin, Texas, which is where Multicoin is based today. My dad's a computer engineer. My mom is a dentist. They're both entrepreneurs. So I kind of grew up around entrepreneurship and around software and technology. I started programming when I was a little kid, maybe 10 or 11 or so. Ended up going to NYU to study finance, thinking I wanted to go down the kind of business career track. While I was in college at NYU, I realized that my passion was really tech startups. I also met Tushar, who's now my co-founder at Multicoin at NYU. After college, I came back home to Austin. I started working for my dad, actually, for a little bit, building software for hospitals. Decided I wanted to kind of start my own thing. And so in May of 2013, I made the decision to launch a company called Pristine. Pristine built software for Google Glass for surgeons. I know Glass was a pretty silly consumer product, but it was actually a very interesting tool for surgeons because surgeons are sterile. They have to work with their hands. And so ended up doing that for a few years, raised a venture, got to a few million in revenue. And then Google killed Google Glass, which was a problem for the business, as you might imagine. And so after that happened, pivoted the company. The company was ultimately acquired for chump change. No one really made any money. And in early 2016, I discovered Ethereum. I had heard of Bitcoin previously, but was not particularly interested in it. But Ethereum drew me in fairly quickly because I recognized the power of permissionless finance and being able to program Ethereum to do anything I wanted. And that kind of struck me as a very important breakthrough in finance technology. Over the course of 2016 and into early 2017, I spent an increasing percentage of my time reading and learning about crypto and kind of falling down the rabbit hole. By the spring of 2017, I realized I had developed a full-time internet hobby and made the decision to launch Multicoin with Tushar in May of 2017. We launched our liquid fund on October 1st, 2017. So that fund is 5 years old now and change. And we also have since launched 3 venture funds as well. And so that's the quick story of Multicoin.
Awesome. How was your life in NYU?
I had a really good time at NYU. I grew up in the suburbs of Austin, Texas, and I, as a kid, I was a pretty strong personality, pretty strong-headed, and I was like ready to escape the confines of the suburbs and go live in the big city. And so the draw of New York was super strong to me. And I got to New York and I absolutely loved it. The hyperstimulation, so much stuff to go explore, and I really loved that. So I enjoyed my time in New York. While I was in college, I did not really spend a lot of time paying attention to class. Most of my time was spent working out and chasing girls and reading about tech, actually. I spent a lot of time programming and reading about tech. Not a lot of time paying attention to finance class and exploring New York City. I mean, New York City is such an amazing place, and it was awesome to explore it for a few years at such a young age.
Many of the crypto co-founders are from Texas. So I would love to know like how's life in Texas and like why like Texas would be a good place for a company to base out of.
So I love Texas, and actually, the more time I spend in crypto, the more time I appreciate Texas for what it is. Texas has a lot of stereotypes, guns being like the big obvious one, and like get off my lawn kind of a thing, which is definitely a real thing in the rural parts of Texas. In the major cities, that's not. I mean, major cities feel like any other major city. What I love about Texas, though, is it's fairly libertarian, which actually I think the ethos of Texas maps to the ethos of crypto in a lot of ways. And this is even reflected in like weird things like energy policy. So in the United States, there's 2 major parts of the grid, eastern and western United States, and then Texas is actually its own, and it's completely unregulated. That's why there's a lot of Bitcoin mining stuff in Texas. But I've always loved Texas for it's basically their view is very pro-business and it's do whatever you want. You don't generally need to ask the government to do things, which is great. And on top of that, there's no income taxes, state level income taxes or local. And so it's a pretty good draw for business. And then, of course, climate's pretty nice. July and August is pretty hot. But if you like that, then like obviously people are in pools and lakes and rivers and stuff all during the summer.
Gotcha. What is your daily routine? I remember you explained me, told me your daily routine once, and that was probably a very inspiring. So yeah, would love to hear it again.
I think one of the most important things in life is to wake up without an alarm clock. So I wake up without an alarm clock. I typically wake up between 6 and 6:30. Yeah, 6 to 7, based on just so my body naturally gets up. I'm a morning person. I typically will do some cardio first thing in the morning. Well, first I'll check my phone for any emergencies or crises. After that, I'll typically jump on my bike and cycle. I'm actually right now preparing for a 150 mile bike race at the end of April,
Awesome.
and so I'm training a lot right now. I'm training right now 70, 80 miles a week, and that'll get up to 100 in the not too distant future. So I have an indoor bike at home. After that, shower and then kind of start work for the day, which is usually between 8 and 9. And I will basically work until 2 or so with a lunch break. I have an afternoon workout session with my trainer, and then from there, I come back home and I'll work basically until 7 or so, eat, and then probably work for another hour, go to bed. Pretty disciplined on that front. I'm fortunate to have set up my life in a way that I get to focus on work and my health. Those are my two primary foci throughout the day.
Cool. Till now, what has been your best and your worst decision in your career?
The best decision was definitely starting Multicoin. That one's pretty indisputable. What was the worst decision of my career? I don't know. I mean, there were things that at the time I did them felt bad, but in hindsight, a little bit of time passing, not so bad. I mean, I'll say launching a company building software on Google Glass, like that was not, uh, I learned a ton from it. I was 23 when I started it, but, Google Glass I mean, I knew even then, like this thing is a very limited device and has a lot of shortcomings. It was just a challenge to do anything, quite frankly.
Gotcha. And like, if you had a time machine, what would you change?
If I had a time machine, I would have, at that time, probably gone into anything else. And I was pretty focused on healthcare at the time because that's what I knew. Probably if I had a time machine and could go back, I would actually have dropped healthcare sooner. Uh, I felt pot committed to that industry at the age of 23, which was a very stupid thing to feel. And I was therefore, in terms of thinking about next startup opportunities, fairly constrained in my thinking. And that was quite unnecessary. So I'd say that's probably the biggest thing I would change is getting it. I understand the importance of healthcare for society, and actually, I have a lot of interest in helping with improving health outcomes around the world. But I actually think doing that internal to the healthcare system is a fairly poor use of energy. And so I wish I had spent those years doing other things.
And how was your shift from being a founder to a VC?
Um, I like to still think of myself as a founder. I mean, I am technically. I think for me, it's probably pretty different than most others who have made the same transition. One thing I knew about myself going into this. Well, let me take a step back. I knew even before I started Pristine that I wanted to be a VC one day. That like the intellectual draw of it was always very clear to me. And reading all the blogs of Andreessen and Fred Wilson and Mark Schuster and all those guys back in the day was very inspiring, and that was like my very obvious draw. In terms of the transition, I knew that like my primary thing that excites me is reading and learning and thinking. Uh, and there are a lot of people who their primary like what gets them excited is building and solving like and making things happen. And like that's not me. And so I live in a more abstract intellectual space, I think, than most. Um, and so the transition for me was fairly seamless in terms of just like I could spend all day reading and thinking, and like I'm super happy doing that. Some people say in VC you feel like you can go days without doing anything, and I actually don't really ever feel that way. To me, like the accumulation of knowledge is like even if I can't understand how that knowledge is going to help me make a better decision, I like very deeply appreciate the accumulation of it, and I am very optimistic that my total accumulation of knowledge will produce better decision making in the long run. So I don't feel that disconnect in the way that I think a lot of others do. The other good thing though about founding my own firm was I still got to experience, or I had to go through the gauntlet in terms of like building a business from the ground up. And in the early days of Multicoin, I mean, we were nobodies. No one knew who we were. No one paid attention to us. We had to fight for every dollar we raised. We had to fight to let entrepreneurs let us invest. And so we had to have that scrappiness and hustle that comes with being an early stage company. Obviously, it was in the form of being a VC as opposed to being the operating entity. But very much that hunger and that hustle was and still is intact.
What was the birth story of Multicoin?
Now, the birth story of Multicoin was, over the kind of first part of 2017, Tushar was still working in his prior company, which was called ePatient Finder, but he was kind of getting frustrated there for a bunch of reasons. And I was unemployed, and I was at that point spending 30, 40 hours a week reading about crypto, and Tushar was reading about it kind of nights and weekends, and we were falling down the rabbit hole together and getting more and more excited. A bunch of ICOs started to happen around kind of early part of 2017, but there were two that I remember extremely vividly. The first was Gnosis, which, if I recall correctly, was like May 12th, 2017 or thereabouts. And they raised, I believe it was $12 million in 30 seconds. Like it was like 2 or 3 Ethereum blocks. And then that was like a week or two later. But the Gnosis one was really the one that like resonated with me the most strongly. And Tushar and I looked at each other and we were like, this is going to be a thing. Like we got to go do this. And so, we formed our first operating entity. I believe it was May 15th, 2017, if I'm not mistaken, and started running pretty fast at that point. And so over the summer, Tushar and I worked out of Tushar's apartment basically every day. We had no idea how to set up a fund. So we called up some of our friends who we went to NYU with who worked at various funds, and we asked them, hey, can you connect us to a lawyer or whatever to help us set up a fund? So we got connected with a very small law firm out of New York that was a budget-friendly law firm. I want to say we got all of our stuff set up for like $30K, if I recall correctly. Today when Multicoin sets up a new venture fund, it probably costs us 100, 150. But at the time we were pretty budget conscious. So we were cutting every corner we could. And so we set that up. We got in touch with this guy, set it up. And then we started fundraising from people we knew. Our network, we didn't really have an LP network. Our network, to the extent we had one, was primarily kind of angel investors around Austin. And so we started reaching out to everyone we knew and raising, money, $25,000, $50,000 at a time. And we launched a fund with, I want to say, $2.5 million. Call it a third of that was internal money, and the rest was external. And most of the rest was really one guy. His name is David Johnston. Yeah, we launched this thing with $2.5 million and kept fundraising, kept hustling. We kept writing blog posts. At that time, I was writing probably one blog post a week. I was writing a lot back then. We were being very divisive on Twitter, trying to make noise and get people to recognize that we existed. And we were just like hustling as fast as we could, trying to make things happen. It was super hectic. The market was only going up. And so it was just a very exciting time. In hindsight, we did a lot of things correct. The most important of which was brand building, especially in terms of writing and just sheer hustle. Probably Q4 2017, I was probably on the road for 2/3 of that quarter, meeting people in person. And that continued to be true through 2018 and 2019. I use Kayak to track all of my trips. And I believe in 2018 and 2019, I was on the road for 130 days each year, roughly. So I continued to travel a fair bit. And that ended up being super important because I basically met kind of everyone in crypto, and then COVID ended up happening, which obviously we could not have forecasted. And then for kind of a year and a half, people stopped getting together in person, and it was a really strong advantage for us of like everyone having met us in person and not just being people on Twitter. And so I think that hustle, both in virtual space in terms of Twitter and the blog, and then in real space, was really paramount to our early success.
So right now, Multicoin is top 10 venture funds. So like what is Multicoin's investment thesis?
We don't have one thesis. We have kind of three major ones on our website that guide our thinking at the highest level. And then we have, I think, some more tactical ones, actually tangible ones. The three that are on our website are open finance, which I think is really a superset of DeFi, Web3, which is really about data ownership and sovereignty and routing packets over distributed systems. And then the third is self-sovereign money. So those three are on our website. You can read about those there. I think we published those in 2019. And those really haven't changed. And quite frankly, they should. If they do change, that's a pretty bad reflection on us. We were very clear in writing those that like those are, we expect to be true for a decade or longer. Other things that have kind of emerged that I'd say don't fit quite as cleanly into those buckets, but that are clearly very interesting. The most notable is proof of physical work, which we've been fairly vocal about. The Helium team really kind of unlocked this theme or this shape of company and DAO. And we were the first and largest money into Helium and continue to be very close with the Helium team. We think that is a real breakthrough in capital formation and is enabling all kinds of new, really cool innovation to happen. Because of Helium, now there's a whole wave of new companies that are using that same model. We are investors in HiveMapper, which is the same idea, but for mapping data. And there's a whole bunch of other teams doing this for car data, clinical trials recruiting, weather data, GNSS, GPS fixing, positioning tracking stuff, grid management, smart grid stuff, a whole bunch of others. So we're very excited about this model. I'd say those are kind of the four major theses that guide our thinking. And then, within those, obviously, you can drill down into lots of sub theses. But those guide us at the highest level.
So what was the story behind the investment in Solana?
So I got into crypto in 2016, started following Ethereum. And, I remember we launched Multicoin October 1st, 2017. Ethereum Dev, I think it was DevCon 3, was like November 3rd or November 5th or something of 2017 in Cancun. I remember we went to DevCon. Vitalik gave a keynote presentation. And obviously this is at the peak of the bull market, right, of 2017. And, gas usage was starting to creep up a little bit. And everyone was like, hey, like, how are you going to scale this thing? Vitalik had published a plasma paper with Joseph Poon 2 or 3 months prior to that. And everyone was like expecting a pretty grand like keynote of like, hey, like here's the scaling plan, like how it's all going to work. I remember his presentation was terrible. He just like rehashed the history of Ethereum and like said like absolutely nothing useful. And I remember leaving that being just incredibly disappointed. I was like, this was like the epicenter of all of the intellectual capital of crypto. Everyone was excited about Ethereum, and like and I was like, there is no plan, like absolutely no plan to scale this thing. And I have been in this, Ethereum at this point is 2.5 years old, and I've been in for call it 1.5 years, and I was really frustrated. I just felt a deep sense of like complacency and like lack of wanting to push things forward, and that was the moment that I started looking for alternative L1s. And ended up meeting Anatoly in April of 2018, so about 4 or 5 months later. At first, he sent me this, it was called Loom protocol, it wasn't called Solana. It was called Loom because of proof of history, and Anatoly envisioned it as a loom that was spinning and the string is wrapping around. I read the proof of history thing. He had a white paper that described it, and I had no idea what he was talking about. I did not understand it at all. I met with him in person. He was unable to explain it to me. But I left the conversation thinking, this guy is really damn smart. What I liked most about Anatoly was he was really very practical. He was like, look, I'm not solving any unsolved problems. I am only going to work within defined computer science solved problem space, and I'm just going to make the system go as fast as possible. And his background reflected that at Qualcomm and Dropbox and a few other places prior to that. I had met at that point all the L1 founders, and it was very clear to me that they all had a pretty strong academic orientation. That's not universally true, but fairly true. And Anatoly was like, extremely anti-academia and was like, make systems go fast, don't take technical risk. It was very clear that he was the most different L1 founder. And also Solana was the most different L1 architecture. We ended up investing in that seed round based on a belief that Anatoly was going to be the guy. We had not yet developed the conviction around the architecture, But over the next kind of 6 months through the back half of 2018, it started entering the bear market, things started slowing down. I kind of went back and tried to reread all the Solana docs. And at one point, maybe it was October, November, December of 2018, I had the light bulb click and I was like, wait a minute, like to me, the most important part of Solana is parallel execution. Turbine is also very important, but C-level and parallel execution are really the two most important things. And when I really appreciated the importance of that, I was like, like all this other shit, like you have to scale execution, like you have to still run the compute somewhere. And that was when my light bulb moment for Solana. And so I reached out to Anatoly Raj and I said, hey guys, we want to get a lot more involved. We want to help you guys. And they were like, who are you? Why are you trying to help us? Like, you're an investor, like stay away. It took us a little while to earn their trust, but over the next 6 months started to kind of earn their trust. And I'd say became pretty close with the Solana team starting like mid 2019 moving forward.
What are your thoughts on investing in a founder and investing in the product?
Multicoin, as a general statement, is a thesis-driven investment firm. We predominantly invest in theses, not in founders or in products. And really, we invest in markets most. Like thesis is primarily a function of market. There are exceptions, Solana having been one at the time of the initial investments, but then all of the follow-on investments and then buying out all the SAFs and all that stuff was a reflection of thesis in terms of understanding the L1 smart contract market and understanding the architectures of these systems and why Solana was the right one. And so, but if you look at most of our investment memos, they're very, very focused on market structure and like what's the core insight that this founder is presenting that on why they have some new approach to tackle this problem space. And that's really what drives a substantial majority of our investing. We occasionally will look if there's a founder that's truly exceptional and like we don't even agree with the thesis, we'll still do it because we think the founder's great, but that's a small minority of what we do. I think product is the least important part of investing. I've always played with our entrepreneurs' products and I always provide them feedback, oftentimes too much, and they get annoyed with it. But I actually think it's the least important part of investing.
What is a good VC joke like you often hear?
I mean, the one that's like the most common is pretty cliche is like, how can I help? All VCs are guilty of it, myself included. I can't speak for others, but I'll say for myself, it is genuine when I say it, but it is very cliche.
Like, what are your thoughts on the post FTX crypto ecosystem?
I'm kind of weird in this one, but I actually don't think that most big events don't really matter. To me, what matters is small into things that compound and become very large things. So, to me, if I think about what's going to matter in crypto in 5 years, the very likely answer is going to be startups who build things that become very big, whether that's DeFi protocols or NFT protocols or proof of physical work things or whatever. But to me, those are the things that are actually driving the industry forward. And so, like, is FTX net negative? Yeah, obviously. But like, is it what is going to define the trajectory of the ecosystem? No. Over the course of the last 30, 40 years of technology, like the recurring theme is small teams build amazing stuff and that becomes big. And that is what ends up defining the trajectory of whatever industry it is, whether it's search or social or mobile or whatever. And I think that will be true here as well.
What are some of your investments you're excited in 2023?
I'll touch on two that we're very excited about. One is Hivemapper, which I mentioned before. Hivemapper is a Helium-like protocol. It's proof of physical work. And the idea of Hivemapper is, hey, like, if we want to have the best maps in the world, the core of building a map is driving a bunch of cars around and taking a bunch of pictures. Obviously, everyone's seen the Google Street View cars driving around. Each of those cars costs $500,000. They have a fleet of however many of them they have. Obviously, they can only drive, 100 or 200 miles per day. If you think about it, obviously the first principles correct way to build maps is, wouldn't it be nice if everyone who's already driving around was uploading imagery into a shared system? That's like obviously the correct way to build maps. And so that's what Hivemapper is that, and then with token incentives so that people have an incentive to bother to upload maps. So Hivemapper, you buy a dash cam, you put it in your windshield, obviously takes pictures and you drive around, it uploads them. Today, the Hivemapper network is mapping roughly 10,000 unique new kilometers per day. So it's right now on pace to map the entire world in 20 years. And if they can, increase their rate of miles mapped per day, then that'll become by 10x, and they'll be on pace to map the entire world in 2 years, which doesn't seem totally crazy to me at all. And so we're really excited about Hive Mapper because it's just like the first order correct way to think about mapping. The core product is out there, it's working. People are mining honey tokens. And then the Hive Mapper team is running the business development to sell that mapping data to businesses that want it. To be clear, Hive Mapper is not competing with Apple Maps or Google Maps to be an icon on your home screen. That's not at all the goal. Apple and Google are actually theoretical customers of Hive Mapper, and they would incorporate Hive Mapper data into their respective products. So Hive Mapper is a B2B service, but their customer, the largest and most obvious segment for their customers are all the car companies as it pertains to autonomous vehicles. And we're really excited about Hive Mapper. The team has deep expertise in mapping. They've got the core crypto parts down, and I think they've shipped like 3,000 or 4,000 dash cams so far. They're going to probably ship, I'm guessing this year, another 20, 30, 40,000. And like this thing is working. So I'm really excited about Hive Mapper. The other one I'm really excited about is Render Network. Render Network is a network where basically anyone who is at home who has a GPU that's underutilized can rent out that GPU to do compute jobs for rendering work. Given the rise of, we invested in Render about 2 years ago, and the core of our thesis was we dug into the pricing of how NVIDIA prices GPUs that they sell to the hyperscalers like Amazon, Google, and Microsoft. And it turns out that NVIDIA engages in first-order price discrimination. NVIDIA will not sell like a 3080 or a 4080 card to hyperscalers. They will only sell, I think it's under their Quattro branding, or maybe now it's the A100 or H100 branding, to the data centers. Those are their enterprise-grade cards or whatever. Those cards are probably 50% more powerful than the 3080 or 4080 equivalents, but they're 5 or 6 times the price. And so the price per unit of compute is much worse. And then secondly, Amazon and Google and Microsoft know that like they have an oligopoly, and that they have no particular strong reason to compete on price. And so because of those two factors, renting out GPUs for doing any job, whether it's machine learning training models or inference, or whether it's rendering images, is very, very expensive. And so the vision of Render Network is like, hey, there's all these latent GPUs all over the world. Can we tap into them for these rendering jobs? And so that's what they do. The team behind Render is a company called Otoy. Otoy was founded in, I believe, 08 or 09. And over the last 13 years has become the largest, has become the number one market share company in 3D rendering software. Their core software product is called Octane. Today, it is the dominant tool that 3D artists and visual artists use to make 3D graphic design and imagery. And also, obviously, this team knows a lot about rendering, and obviously, they have a pretty technically qualified. The most exciting thing about Render is that's really changed that we did not foresee when we invested 2 years ago was the rise of generative AI, like things like Stable Diffusion, Midjourney, and DALL-E. And our view is that today to use Octane to produce some sort of art is pretty involved. Most people don't even learn how to do it on their own. They actually go to school to learn how to do graphic design and visual art stuff. And so the market size for Render was always somewhat limited, and that was our biggest concern when we invested. But with generative ML, now instead of having to be trained in how to use Octane, which is a very sophisticated product, now to produce stuff, you just need to type 3 words, 5 words, 10 words, and you can render images and videos. And so our view is that the market size for Render just increased by a factor of at least 100 and probably even 1,000. It's pretty rare in the history of like anything that you can say with a straight face, like, oh yeah, the market size just increased by a factor of 100 or 1,000. The most famous example of that in the last decade is Uber. Like, people thought the taxi market was X, and it turns out Uber expanded the taxi market by a factor of like roughly 10X. I think this is that, but actually even larger, multiple. And so we're really excited about Render. because it's at the confluence of Web3, distributed compute, machine learning, and generative AI. And this team is about as well positioned as possible, given Octane and like the core business there, and now building out the render network. The last comment I would make is all of Octane's competitors, so companies like Cinema 4D, Redshift, Arnold, and others, are all integrating the render network today. And so what's really exciting is that, over the course of this year, you'll start to see teams that are competitive with Octane sending jobs to the render network. That was one of the biggest risk points when we invested, was that they would just say no because it was affiliated with Otoy. And they've overcome those concerns, and they all recognize the opportunity to reduce cost and improve turnaround times for rendering jobs. So we're really, really excited about Render.
And what do you think about like the L1 ecosystem now? Like recently you invested in Aptos and I'm not sure Sui.
We did not invest in Sui. We did invest in Aptos roughly 1 year ago.
Sorry, not Sui.
Generally, my
I
comments
think
in the L.
C.
We invested
I
in
think the
Say, yes.
Say, sorry.
Yes, we did invest in Say. My views haven't evolved much on the L1 ecosystem. I think the most interesting things in the L1 ecosystem are at the extremes. So one extreme is general purpose integrated chains. So things like Aptos and Solana that are focused on composability, developer experience, just like everything just works. You don't have to think. You don't have to think about rollups and liquidity and withdrawal periods and ZK rollups and like all this other shit. Like, don't think about any of that stuff. Drop contract and go. No thinking required. And that to me is one extreme. And then the other extreme are app chains. And I think app chains, in general, I actually disagree with their premise, with a couple of exceptions. The most obvious exception to me is the opportunity for DeFi derivatives. There is a case to be made that a general purpose chain like Solana or Aptos is incapable of providing a low enough latency to run an on-chain limit order book for DeFi derivatives. If that is in fact the case, which it may be, then you may want to build a system that's more optimized for that. And this is why DYDX is building on Cosmos, but also why Say is doing what they're doing. So assuming that's the case, then that architecture is very interesting, and that's why we bet on Say. In general, I don't think app chains make sense. The customizability afforded is not terribly useful for the vast majority of applications. Again, the most notable exception to that are DEXs, and within that, the section, the type of DEX that matters most are derivatives DEXs, given the inherent nature of leverage and risk in those systems. So that's why we bet on Say very specifically. There's a very pointed bet on that kind of view of the world. But again, it's very unclear if general purpose chains are good enough. I suspect general purpose chains are good enough. I think we will get there, but I could be wrong. I think all the other stuff, ZK rollups, optimistic rollups, app rollups, to me, these sit somewhere between those two parts of the extreme in terms of either general purpose integrated chains and app chains that are really leveraging the power of customization, most notably around DeFi derivatives and leverage and risk. Everything else to me feels like pretty questionable on the trade-off space.
Got it. Now moving to the rapid fire round. Coca-Cola or Red Bull?
Coke Zero.
Gotcha. AI or crypto?
Crypto. If I answered AI, I might be fired.
Your favorite book?
My favorite book, it's the most important book I've read in my life, is called Why We Sleep, written by Matthew Walker. I read it a few years ago. It scared me into sleeping more and taking care of my sleep and optimizing my health. I think that was probably the start of my health journey, was reading that book.
Your favorite quote?
My favorite crypto quote is definitely a Suzu quote. If you don't manage your risk, the market will manage it for you. It is so perfect, and I'll leave it at that.
Cool. Out of the rapid fire round, what advice would you give to founders?
Follow your curiosity. Don't follow. Anytime people start talking about trends, that's usually not a good signal. You should follow deep-seated curiosity. That will be the highest EV. That's the highest EV path in the long run.
Got it. What advice would you give to a new investor?
Most new investors don't take enough risk. and I mean that mathematically in terms of portfolio concentration. Multicoin Venture Fund 1 had 27 names in it, and the top, like, I think 6 or 7 names were half the fund. I think it's paramount to take, like, on smaller funds, if your first fund is 15, 20, $30 million, whatever, none of the LPs in that fund are like entrusting you to like generate returns so they can pay their pensions and like pay, like, for all of them, like every single LP is like investing in you. You're at the end of the risk curve for them. So you don't represent a meaningful percentage of their total capital base. And so you should take as much risk as possible in terms of concentration. I think that's super important. I see way too many $20 million funds that have 50 names, and I'm just like, dude, what are you doing? Like, you're guaranteeing mediocrity in your returns. Like, launching a $30 million fund is like not an end goal. It's a great starting place, and it's obviously very difficult to do. But like the goal is to like run a bigger fund and like have more impact. And so, like, producing mediocre returns and like slowly compounding is just really stupid. You should take more risk. I think that's the most important mistake that early managers make.
What advice would you give to bear market survivors?
The most obvious one is don't run out of money. So make sure you understand your cash position. And general rule of thumb is bear markets can go on longer than you think they can. I think there's that famous quote that the market can stay irrational longer than you can stay solvent, right? Like, that applies to surviving bear markets.
Got it. What are some of the productivity tips you'd like to share?
I'll share two. One is I think the most important piece of productivity software ever invented is a tool called Alfred for Mac. There's no Windows version. I believe the Windows version is called Quicksilver, although I have not used it, so I'm less familiar with it. The URL is alfredapp.com. I've been using Alfred probably 100 times a day for over 10 years. Alfred is it's basically what is it called in Mac OS? Spotlight search, but on steroids. And it has basically every keyboard shortcut you can imagine to navigate your operating system. Clipboard history, paste without formatting, just a ton of amazing features. I use Alfred a ton, and I swear by it. It's an incredible piece of software. I actually wrote a tweet about it the other day. I'll send it to you, Gaj, after this if you want to include it in the show notes. And actually, one of the very first blog posts I ever wrote in 2013 was about Alfred. So I'll share that. And then the other productivity tip I'll share is in terms of taking care of yourself and cardio. My preferred form of cardio is cycling for a bunch of reasons. One is it's not hard on your knees. Two, and so you can do it until you're 100. Two is you can control very clearly your energy expenditure measured in watts. So the bike I use called Wahoo, it actually shows you your wattage you're expending in real time. And what's nice is I can, week over week, I can see I'm clearly clicking up on the watts, and I can see and measure my performance in quantitative terms, which is amazing. And then three, and maybe most importantly, is you can multitask. I am cycling typically with my heart rate between 135 and 140, which is low enough that actually you can carry on a conversation. The person on the other end of the line will hear that you're panting a little bit. So I would use this for a call where you need to be the primary one talking. But if you're on a call where you're talking 5 to 10% and the other people are talking 90%, you can do this while you're on the bike. And so in terms of time efficiency and time management, it's pretty amazing. And also you can obviously listen to podcasts and stuff as well. So I'm a big fan of cycling. It is a very time efficient way to do cardio.
What are some of your life lessons you would like to share?
I generally believe, there's like this always discussion you see kind of reemerge on Twitter every now and again about like, should you work super hard in your 20s or not or whatever. I think you should, if you are aiming for exceptional outcomes. If you are not aiming for exceptional outcomes, then you shouldn't. But if you are, then it's almost impossible to achieve an exceptional outcome without being in the top 5% in terms of work ethic. It's just very difficult. Like, you can be in the top, like if you want to let's say, be in the top 1% in terms of outcome. And I'm not defining this strictly as a function of money, but it's a function of status, prestige, depending however you want to. But if your goal is to be in the top 1% in terms of outcome, and you're in the 20th, and then you're in the 20th percent top in terms of work ethic, yeah, there's always work smarter versus work harder, and that's a real thing. But there's only so much you can overcome through working smarter. Like you also need to work harder too. And so like it's pretty hard to come from a 20, being in the 20th% in terms of work ethic and achieve a 1% outcome. I think it's more possible if you're in the top 5% of work ethic to achieve a top 1% outcome. So I think that's pretty important. But again, that's not for everyone. And you need to be very honest with yourself if you want to make those sacrifices.
What is some of the alpha you'd like to share?
I think I just shared a bunch with Hive Mapper and Render, so I'll leave it at that.
Cool. Awesome. I think these are all my questions. Thank you so much, Kyle, for joining this podcast.
All good, Gajesh. It was a pleasure to be on the show. I'm glad to support you in your new endeavors. And congrats on all the success, and we'll be in touch.
Awesome. Sounds good.